Hi, my name is John Stevenson, and welcome to the Guaranteed Retirement Guy Show. I had someone reach out to me yesterday who was in their early 40s, and they were wanting to purchase an annuity. And then I had someone else reach out, and they were in their 30s, and they wanted to buy an annuity. And I've even had people in their 20s, early 20s, that want to buy an annuity. So I often get asked the question, when is the best time to buy one? Okay, should I wait later? Should I buy earlier? I noticed in your calculators that a lot of these deferred annuities pay out a lot more if you defer them out. And yes, that is true. It just depends, though, on when you're going to take income. Sometimes it is better to wait, especially when people are young. Like when people are like 20 and 30 years old, I usually tell them, hey, put your money in the stock market. I mean, I'm not an investment advisor. I'm not telling people, invest your money in stocks. But if you are young and you're okay with some risk and you want some more growth, typically stocks are a great option. And so, anyways, that's, they can certainly buy an annuity. You can buy an annuity at any age, okay? But it's usually best, in my opinion, probably the best to wait till you're like in your 40s or 50s to do it. And I'll show you why. I mean, we'll play with the numbers right here, and I'll show you on my calculators exactly what that income payout looks like. If you want to see for yourself, just go to my website, johnstevenson.com, and you will be able to use my annuity calculators there. I've got feeds from Canex and Annuity Rate Watch that update all of the annuity options every single day for you. So if you want to look at those, and then if you're thinking, hey, I'd like to purchase one, or I'd like to get some help with this, then please book a call. There is a link there on my website. So anyways, let's take a look at this client. So I'm basing this off of someone who is 60 years old. They're in Florida. They're married. They've got $500,000, and they want to take income at 67. Okay, that's a pretty decent deferral time. We're looking at probably someone who's still working, and they're thinking that they'd like to wait till full retirement age for their Social Security benefit to kick in at 67. Okay, and in this case, they're both the same age. If one spouse was younger than the other, it would change the payout. So it just depends on how long this insurance company will be on the hook for this lifetime contractual income. But you can still do pretty well even with a 7-year deferral. So let's take a look. We'll say, all right, well, $60,000. That is pretty good. That's guaranteed income for life. Okay. We take that out, and you can see the highest one here is with Clear Spring, followed by Delaware and Corbridge. But if we were to look at how this illustrates, I'll show you here the income starts at $60,000, 618. And that goes out for the rest of their lives. And if they take it out till 95, it's 1.757. So it's pretty good for lifetime income. And you can see the account balance here lasts for a while, but eventually runs out by the time they're 80. And if they were to die before that time, then the death benefit here is their account balance. So they're leveraging their money for higher income from an annuity contract without losing access to their money. Okay. So this is very valuable, and it's just because they put this in at 60 and they waited till 67. Now, some of us can't do this. Some of us are like, well, I'm retiring right now. I'm retiring next year. You could still lock in a lot of great income for yourself. It's just not going to be as much. So, and it's just because, the drawback is it's less income, but the flip side, it's always nice to take it earlier, because now you got like 5 or 6 years of income that you can take right now instead of waiting until 67. So there's nothing wrong with taking income earlier rather than later. You just have to realize if it's with the insurance company for less time, the income's less. So in this case, you're getting, instead of $5,000 a month, you're getting $3,000 a month. Okay. You can see $36,000 a year is the highest, and that's with National Western. And then you can see Clear Spring is right behind them. So it just depends on your goals and what you want as far as income. If you want higher income than this, then you just need to throw in more money. And we're like, well, I got more money, John, and I want to start income now. I don't want to wait. Okay. I don't want to wait till I'm 67 if I don't have to. Well, it depends on your financial situation. If you're in a good spot where you don't have to defer it as long, then yeah, 71, almost 72, you're looking at $6,000 a month. That's pretty good for life. So, and if you're a single person, then the income's going to be higher. Yeah, $83,000, $84,000. So there you go. All right. So now that we know what it looks like at age 60, let's change a few things. Let's say you're 45. Okay. 45, same 500,000. We'll go back to $500,000. Okay. And let's say your spouse is 45. Let's just keep things equal here. And now what we're going to do is you'll notice here the minimum age is 50. A lot of these annuity contracts will not let you take income before 50. Okay. Because you're going to live a long time. That's a lot of lifetime income. So a lot of times they will not allow that. If you want to take income before 50, a SPIA or a DIA contract is the best way to go. Okay. All right. So let's look at 67. So now we have the benefit of a lot longer time to defer the same amount of money. Okay. So same 500,000. You still want to retire at 67, but you're thinking, I'd like to do this earlier rather than later. How much more income can I get? Okay. Oh, wow. That's pretty good. $122,000 guaranteed income from American Equity, and followed closely by Nationwide and so on. You got Athene and some of these others. But yeah, if you're looking for highest income, boy, American Equities is pretty good. Yeah, I go up here. That's joint too. So, wow. So you're taking that 121,000. What is that? It's roughly 122. And let's say you take it for 30 years. $3.6 million in lifetime income from only $500,000. Wow. Okay. So there you have it. If you do have the money and you want to invest earlier rather than later, this is a great place to be when you're looking for guaranteed income from a relatively lower investment. So, and then you've got your floor, okay? You're like, all right, I've got 121,000, great. My Social Security at that age will probably be 40,000, okay? So now I've got 160,000 guaranteed income. So you throw the money in there, you let it grow, and it's contractual, it's guaranteed, no matter what the index does, because this is an income rider attached to a fixed index annuity. But the index, all that does is influence how long the death benefit lasts. It does not influence the income at all. I'll illustrate that for you so you can see. All right, so looking at the account balance. So yeah, it's not a growth account. Just fair warning, it's not a growth account. You're doing this for income, for pension, okay? So you throw the money in there, grows. Yeah, it really hovers, like it really just kind of grows to maybe an extra $100,000. But again, and you can see once you start taking income, that account balance runs out. So it's not for legacy. Okay, this is for income. And so you go over here and you say, all right, well, how does the benefit base work? Well, they're giving you a 10% premium bonus up front. And then they're giving you a 6.5% roll-up rate for up to 20 years, which since you did it early enough, this works out good. You can see the benefit base growing this, compounding this until it hits like 1.9 million after 20 years. And then it sits there. You notice how it stays there for 3 years. But the withdrawal rate continues to grow right here. So if you decide to wait till 67, it's going to be 1.938 multiplied by 6.29, giving you 121,901. If you decide, I want to start income earlier, I changed my mind, I'm going to start it at 64 years old, then you see right here, it's 116,000. Okay. It's very flexible. You just go up this column and you say, all right, here's exactly what this will pay me in lifetime income if I were to take it earlier. But if you wait, boy, look at the payout. That is just crazy. $122,000 from only $500,000. So I guess the answer to this question, if you are looking for an answer to what is the best age, then I would say the best age is as early as you can. Okay. But if you're in your 30s, probably, you don't have to, but, maybe think about, make sure you're aggressive at other things to get some more growth. Annuity contracts are great, but I still like to have some growth outside of it. So I really advocate for both. A lot of people are like, annuities are horrible, only be in mutual funds, only be in stocks. And then on the flip side, only be in safe investments, only do annuities, only do bonds, only do money market, and keep your money safe. But then you lose out on the growth of the market. You lose out on beating inflation. Okay. You might ask yourself, well, John, $122,000 is not going to be worth what it is today. That is correct. That's why you've got 22 years to continue to invest. Put your money in, and then when you do that at 67, you can buy more income on top of this, and you can just take a small slice of your portfolio, buy more income, then wait another 5-10 years, buy more income, and keep doing it. That allows your account balance to continue to grow. You can take off the needed amount to give yourself raises, and you can keep pace with inflation, and it's all contractual, guaranteed lifetime income. So there you have it. All right, if this has been valuable to you, please like, subscribe, share, comment below. I'll answer. If you are thinking about purchasing an annuity, I'd love to help you. Go ahead and go to my website, johnstevenson.com, and book a call, or go to the link below this video and you can book a call through there as well. But if you're just thinking, hey, I really don't want to talk to you, John, and I just really want to see what the payouts are without having to talk to you, that's fine. Go to my website and use my calculators. It's going to ask for your name and email, and that email is only used to send you the quote. A lot of people get mad about this. They're like, I do not want to share my stuff. I'm not putting you on some spam list, okay? I'm not going to sit here and hound you and say, are you going to buy an annuity? I don't care. I need that email so I can send you the quote. That is it, okay? That's it. So just want to be full transparent there. I want to be treated the same way, and so that's the way I treat others. So if you feel that there is value for meeting and you want to look at purchasing an annuity with someone who's transparent, who's going to show you everything regardless of what he's getting paid, then I would invite you to go to my website, check the annuities out, and then book a call. So anyways, thanks for watching. I appreciate you, and we'll see you soon.